The Bulls got absolutely body bagged again today, team. Let's take a look at this price action. Andrew O'Connell here with Pristine Capital, and let's put some context around what we're seeing. I think there's a lot of the sky is falling mentality out there. There's a lot of fear that is gripping the markets. So let's dive into these box scores. We have the S&P 500 finishing down just over 4%. NASDAQ QQQ was our big loser for today. It finished down almost 5%. Small caps are still outperforming the mega caps, which is definitely a positive divergence for me. Dow Jones finished down 3.5%, and the ARK Innovation ETF finished down a whopping 4.43%. All of these indices closed towards the low end of their daily trading range, with the small caps putting up the most of a fight, finishing 18.1% through its day's range. Volatility exploded higher for all of these indices, and we had a washout of breadth. My trend model flipped from a +1 at the start of the day all the way down to a -3 into the close. So definitely volatile action, and I need to make sure that with my trend model at a -3, if the market continues to decline, following my stops, following my risk management process, and really just prioritizing the fact that my initial assumptions heading into this week could be completely wrong. I want to make sure I'm staying open-minded and just not getting too stubborn on this market. That being said, let's dive into what we're seeing here. As of last week, we started to see like a big puking going on in the markets. When we got our CPI data and we got our PPI, we saw the growth stocks completely puke. And now we are starting to see that puking move to other areas of the market. Now the majority of it has gone from small cap growth. Now it's in mega cap tech, and now one of the last safe havens investors were piled into, which is consumer defensive stocks. They are the final target for this sell-off. So look at this. We had Walmart down another almost 7%, Costco down 12.5%, and Target was the big canary in the coal mine. It finished down almost 25%. Let's take a look at some of these charts. I actually took a brief look through the Target earnings, and it definitely wasn't pretty. Like Target pretty much has no business growth at all, and this stock, everyone was really crowded into it. So the vibe that I'm getting out there is oh my gosh, we are in a recession, Target is down huge. But when I take a look at Target, look at this monthly price chart. This stock had pretty much gone nowhere for the better part of a decade, and then once coronavirus broke out and everyone went on lockdown, this stock became a huge big time winner for a lot of players. And then to be honest, this really just looks like a Bill Hwang special. Look at this. So I think a lot of investors, they're getting this twisted where it's Target is down this much, that has this huge implication for the world. Whereas I looked at the earnings, it's not like Target's going out of business or anything. They still posted good results, but it's just everyone's been hiding out in these names. So when you have all these other groups of stocks that are down, crypto's down over 50%, growth stocks again 70 to 90, and everyone's been trying to get closer to their benchmarks and getting these consumer defensive names. When they post a bad quarter and the market's in a puking phase, these stocks, they're not invincible and they can fall just like any other stock. So look at Target. This thing is not even retraced half of its parabolic advance from 2020. So I really think that this whole thing is definitely getting very confused, and I don't think it's this huge economic signal. I think it's more of a function of the market positioning and really just the rotational nature of this sell-off. So Walmart, same exact dynamic. And then let's look at Costco. Look at Costco stock. This thing has been a runaway freight train. This is the monthly chart of this thing. It's just been free money. How much alpha has been in Costco? How many players, I would imagine on the institutional side, oh my gosh, this is the only stock that's been working for me. I can't sell my Costco. And then of course, as they get blown out of everything, then finally they got to get rid of their Costco. Look at this. Costco down a huge clip. And this thing has really just fallen off a cliff over the past couple weeks. As we know, these institutional fund managers, they're getting pushed out of a lot of their positions, and really just the fear is gripping the market. So I'm definitely viewing this consumer staples weakness in a bit of a different way than most other market participants. And to be honest, if I continue to see that small caps are outperforming to the downside and the upside, that is telling me that a lot of the selling in the small cap space and the growth stocks, etc., it's likely over, and we're likely seeing a lot of the residuals of that action. The interesting dynamic is there's much more risk in the safe stocks now that everyone is still long. But that being said, this is a huge down day, so I don't want to like discount it or anything. Let's take a look at the price action of the S&P 500, and this is another really interesting dynamic. So we have our teal downward trend line, and as of right now, this just looks like another failure at the teal downward trend line. So have to take that into account. It also looks like it could be a failure at the 20-day simple moving average. But that being said, this market is so volatile, and over the past week, the market's really done nothing. We had a violent bounce, but here we are, we're back to where we were at around May 12th. So levels not seen since, 6 days ago. So I think a lot of investors, especially on the retail side, they're falling victim to like, everyone has such PTSD about the market. Over the past week, the market's done nothing, but I think people are acting like, oh, the market just took another leg lower, like it just crashed. And yeah, in reality, just not a lot has changed. A lot of the exposure that I was adding in terms of, adding some growth stocks, adding the cloud names, I was adding that into these candles over here. And I was making sure to not go crazy adding that exposure as we rip to the upside. So I'm in kind of a weird spot where my trend model flipped negative, which is, I want to make sure I'm following my risk management. If my stops hit, I'm going to make sure to take them. But what's weird is a lot of the entries that I've taken, I'm still above water on them. Like I got some questions about this in our group today. Like the ARK Innovation ETF, for instance, added this one literally on May 12th. And we talked about this in our market recap video, the whole 9. So like, as I look at this action from today for the ARK Innovation ETF, I can't say I'm like, oh my gosh, like I'm worried now. Because it's like, this thing has really just done nothing for the past couple days. Like for instance, Sky as well. I bought this as this group was bottoming. My cost basis on this is about like 65.55, I think. So now I'm like 6 cents underwater. I think the real test now is, do we actually undercut these lows that we made a few days ago? I think if we do that, then even for myself, I really have to just be like, okay, I'm going to take my stops, and, original thesis that some of these names could be bottoming was completely wrong. And I just have to be comfortable with that. But yeah, given where I got my cost basis for a lot of my exposure, so far, this is just kind of like, all right, I see like everyone panicking, everyone online is like losing their mind, but so far I'm just not seeing it at the moment. Or like really just I want to make sure that I'm not getting shaken out of these exposures as the market does its thing. And that being said as well, it's options expiration week. And options expiration week can be highly volatile. It can be super choppy. We know that there's a ton of put open interest out in the market, and there's a ton of open interest at the 4,000 strike for S&P 500. So I know that in my mind, I'm like, there's a high chance, like, well, what are the odds that we close like right at 4,000 on Friday? I would not be shocked if that happened in the slightest bit. So yeah, for me right now, these days are always pretty jarring. Like after the market closed, I ended up just taking a nap. Sometimes when the market has like a crazy move, I'm like, all right, let me digest this. I'm going to go take a nap and, reassess from there. And so yeah, these moves, they're definitely really big for anyone that's kind of like, on the edge of your seat, or you're a little bit like nervous or whatever. That's completely justified. I totally get it. One thing I will say though, is just be careful about, your anchoring biases. So like you want to make sure that like, as we know, we're in an incredibly volatile market. If you're getting like super euphoric on these green candles, and then like the next day we have a red candle and now you're like super fearful, whatever, it always helps to just kind of zoom out a little bit and see where you are and just kind of like, yeah, re-anchor yourself. Because like, let's say you were perfectly fine on this candle or this candle, you shouldn't be like losing your mind now that we're just really revisiting those levels. So yeah, we'll have to see what happens into tomorrow. The NASDAQ is definitely looking pretty weak. We're revisiting this VPOC that we hit a couple days ago. Small caps, these were down 0.46%, or they are in the after hours. And yeah, the small caps, they are actually not even retesting those lows from May 12th. So again, this is definitely a bit of a positive divergence. And perhaps a lot of these big institutions, they've already puked up these exposures. All right, let's talk about my trades for the day. Again, I've been pretty careful about only adding exposure at really ideal trade locations. Today I did add one position. It was in DLO. And this stock, take a look at this. I tried to sort of do like a reenactment of the global E position that I took yesterday. And same thing for global E. Let's just jump over to that one before I move on here. So global E, entered this one, talked about it in the recap video yesterday at length. I got into this stock for like $17.60. So yeah, today this thing is down 14.8%. That's a huge loss day over day, but I'm honestly just not really sweating it because I got in for a much lower price. So I really think like trade location really matters. And if you're buying into like the ding dong highs, you're likely getting shaken out or stopped out or whatever. But yeah, so long as you're, pretty savvy with your trade location, you're following your discipline, you're not just chasing stuff. I think over this past week, like the A players, they're not feeling the pressure just yet. But yeah, DLO, take a look at this. This is another name in the growth space where my thesis again has been, I'm seeing a lot less risk in some of these beaten down areas of the market than I am in the leaders. DLO, this thing is back above the 20-day simple moving average, put in a nice volume bar. So I got long the DLO December 16th, 25 strike calls. So again, I'm not like, being like, let me buy the weekly options or like whatever, but take a look at the results this company put up. They're an international payments processing company and their total payment volume went up 127% year over year. Revenues grew 117% year over year. Gross profit grew 87%. Adjusted EBITDA up 84%. And this was pretty huge for me. A lot of these growth names, everyone is worried about them because, hey, these companies, they don't produce any cash. They're cash guzzlers. They're not profitable. They're not going to be for years. So as interest rates rise, you got to discount these things at a higher clip, etc. This company, it's reporting positive earnings. It had 8 cents per share, and they're actually increasing their cash. This company had $410 million of cash on hand compared to $336 million as of the last quarter. So I'm looking at this thing, and again, granted, like maybe the market goes a little bit lower and like, oh my gosh, everyone's like so short term that like that's the end of the world. Like if I buy something and it goes a little bit lower, like, oh my gosh, like the sky's falling, whatever. But as I'm looking at this, I'm sort of getting a little bit greedy here where I'm like, hey, everyone's losing their mind. Companies like this, they just put up an amazing quarter, so I am going to take a bite on this one. See, I bought those December of 2022 call options. I think a lot of these names, assuming that the market gets some traction, this stock, it hit a high of like 75 bucks in August. So I think there's a lot of players that, yeah, they're being forced to puke out of these names, but this one, I think it could have a really bright future. I'm pretty excited about it. Other than that, that was the only trade that I took, and I want to make sure that heading into tomorrow, despite my more bullish outlook on the market, I want to make sure that all my stops are updated on all my common stock positions. If those stops hit, I'm going to go ahead and take them because my thesis could be completely correct, but maybe we do end up taking one leg lower in the market. I don't want to get stubborn and like mess up my portfolio because I'm just trying to, over control what's going on in the market. So yeah, with that being said, thank you so much for tuning in to tonight's market recap video. Really appreciate everyone that is watching these. You guys are all awesome. Make sure you're keeping your mental capital intact. Make sure you're zooming out a little bit. If the market action is just driving you crazy, make sure to get up off the screens, stretch your legs. You don't have to like stare at the market all day as, it's careening into the abyss. Hope you guys all enjoy the rest of your night. I'll see you all tomorrow.